Yeah, just a brief update to keep investors up to speed with what we're doing. Just on the first page, you see our pre-tax NTAs 136.1. In the last 12 months, the portfolio's returned 25.6%, and since inception up 13.2% there. The interim and final dividend last year was 7 cents, so that's equating to a yield of about 5.7%. As a reminder, our board has a stated dividend policy of paying out 5% of NTA at 30 June each year. So whilst we remain at a discount to NTA, that provides a reasonably healthy yield. We retain dividend reserves of around 5.2 years as at June last year, so it gives us reasonable dividend assurance going forward in the short to medium term there. We currently have 80 stocks in the portfolio. 21 of those are unlisted and account for 29% of the portfolio. Recently, there's been obviously some debate over why LICs or LITs in the market and their benefits. We've deployed this investment strategy for ACQ, and it needs a longer term horizon reflecting the emerging companies in the market. The portfolio does include a number of securities that are relatively liquid, particularly the 29% of the portfolio that's unlisted. And it's that relative illiquidity in the portfolio that allows us, we need the time, the captive capital to structure that and to achieve our relatively strong returns from those unlisted investments over a period of time. And also to provide the cash flow requirement to make those follow-on investments there. So that stable capital base, I think it enables us to execute this portfolio, which provides retail investors with a relatively unique set of investment options that they can't otherwise access in the market. So on to the next slide. The portfolio has returned 15.1% for the financial year to date, and that's 11.2% above the accumulation index of the Small Ords. And we've outperformed in all major indices over the 3 and 5 year period and since inception. We completed 2 new investments in the period. One is Splend, which is a financier of rideshare vehicles, and Marketplacer, which is the backbone of many of the well-known marketplaces that are growing in the market at the moment. And also, one of our larger investments, Muller, completed a funding round, which uplifted our valuation there by some 40%. And Carbon Revolution IPO'd also. So the next slide just gives you an idea of our dividend history there. A combination of ordinary and special dividends historically, predominantly ordinary, and the value of the franking credits on top of those. Just a reminder on slide 7, this gives you an idea of where Acorn's targeting. We're not at the seed startup level, we're that provider of growth capital. So we see ourselves both in the early expansion stage, particularly in the sort of IT and biotech market, and into the further expansion stage for those businesses where there's quality management that require additional capital to execute there. To give you an idea of our investment market and where we play on slide 8, you can see that a vast majority of the companies, 58% there by number, are developing companies there. And on the right-hand side, you can see we've got quite a high exposure to materials, resources and energy, and relatively low to banks in our investable universe. In slide 9, this gives us an idea of Acorn Capital's diversified and strong investment team. We invest in all of the ASX outside the 250, whereas some other alternative funds might only give you mature companies, or some may also exclude resources and energy, where we've got an experienced team in resources and energy. Both are geologists by background, and carries on Acorn's strong tradition in that space. The next slide, slide 10, gives you an idea of the diversification of Acorn in the markets we play in. And you can see there it is relatively diversified with strong positions in resources, consumer discretionary and financials outside of REITs. The next slide, the perpetual motion slide, slide 11, just shows you how we do manage our investments from a relative attractiveness basis. They might start with preliminary due diligence. On the right-hand side, we then structure the investment, complete our qualitative and quantitative due diligence. We've got an in-house legal team that ensures that what we're signing up to is in the best interests of investors. We then monitor it and then head towards liquidity. Everything we invest in the unlisted space, we do require an alignment with management so that they are seeking an exit strategy and don't want to hold on to the as a founder for the investment. And then when it hits IPO, if it goes down that path, we then have the ability to hold that investment, invest further, or to exit as we manage it against the other listed stocks we can invest in. The next slide, just briefly, is the top 10 holdings there. It's at the moment, I'd say it's relatively high. It normally ranges around sort of 35%. But obviously we've had some relatively good performance in some of our bigger holdings. Moola Money, as I said, it got a 40% uplift in the last valuation round, and we continue to hold it at that valuation. And then two of the previous unlisted investments, which we remain high conviction in Telix Pharmaceuticals and Carbon Revolution, remain at the top of the list there. We also have taken Calix from an unlisted investment also into the listed space there. And the next slide, slide 13, just is an indication of our sector composition and our opportunities that we've done in the unlisted space. So we've made 40 investments. We've achieved liquidity events in 19 of those, and the average uplift has been around 40% there. More recently, in terms of action in the portfolio, slide 14 does show you that we had a successful IPO of Carbon Revolution at $2.60 per share. We continue to hold that as a significant investment for Acorn Capital. This is an example of an investment we invested in back in 2015, and we continue to follow on with our money through the unlisted experience there, resulting in providing financial capital to then hit the markets. Slide 15 gives you an idea of two of our more recent investments. Marketplacer is the platform that provides the marketplaces for the likes of Myer, Jayco, Accent Group, and some other well-known names that can't be disclosed at this stage. This is the marketplace provides bricks and mortar omni-channel retailers with an ability to widen their offering, deepen their SKUs without having to hold the inventory on balance sheet. And there's a fast-growing market there. And then the other one is Splend. This is a financier of the ride-share market. Its key value differential for drivers is providing a self-insurance function that significantly lowers the cost, provides them with the flexibility of the cars they want, and provides significant upsell services there.